What is meant by recording business transactions? It is the process of entering business events into the accounting system, which is more common and automated. By recording transactions, we are unable to translate business transactions into accounting records. So recording business transactions is a basic accounting process. Ito ay isang nakasulat o naka-record na mga impormasyon na nauukol sa isang account which may be issued by the bank and includes without limitation all statements of account receipts, transaction records, or confirmations generated by the bank. So recording business transaction is a multi-step process. So the first step in the recording business transaction is to examine the transactions and decide what accounts will be affected. The second step in recording business transactions is to decide what account will be debited and what account will be credited. So the third step in recording business transactions is to actually document the transaction in a journal. Next one is the accounting journal. So what is meant by accounting journal? An accounting journal is a detailed account of all the financial transactions of a business. It is also known as the Book of Original Entry, as it's the first place where transactions are recorded. The entries in an accounting journal are used to create the general ledger, which is then used to create the financial statements of a business. So, accounting journal is nagpapanatili din ito ng isang historical account ng lahat ng naka-record na transaction which the company has engaged. So in other words, a journal is similar to a diary for a business.
So now we will move on to the next topic, which is all about double entry accounting. So double entry accounting states that for every one transaction that occurs, there will be at least two accounts affected. One account will be debited and one account will be credited. A debit is an entry made on the left side of an account. A credit is an entry made on the right side of an account. These dual effects of a single transaction will either increase or decrease an account balance. So, another basics of accounting is the double entry, and it is applicable to all accounting transactions. In short, the double entry system of bookkeeping standardizes the accounting process and improves the accuracy of prepared financial statements, allowing for improved detection of errors. So, one of the principles sa double entry is to showcase and ensures that the accounting equation remains balanced. So the accounting equation is asset is equal to liabilities plus equity. So this equation must remain in balance. Double entry accounting maintains this balance by recording each transaction as a journal entry that balances an equal number of debits and credits. So the best example of this is the T account, by which the wide scope of this topic will be discussed and tackled by Mr. Loyola. So there are two important rules that govern the ways of company utilized by the double entry accounting. These rules is to ensure the accounting equation is balanced and reduce the likelihood of errors. So first is every transaction must be recorded in two or more accounts. Second, for each transaction, the total amount debited must equal to the total amount of credited. So now we will proceed on the next topic, which is all about the journal entry. So what is journal entry? So a journal entry is a record of business transactions in the accounting books of a business. A properly documented journal entry consists of correct date, amounts to be debited and credited, description of the transaction, and a unique reference number. So, ang journal entries are the foundation for all the financial reports. Simply, they provide an important information that are used by the auditors to analyze how financial transaction impact a business. So, the journalized entries are then posted to the general ledger. So, there are two types of journal entry. First is the simple journal entry. So, simple journal entry is an accounting entry in which one account is debited and one is credited. So, simply, the use of simple journal entry is encouraged as best practice since it is easier to understand. The best possible approach to their use is to thoroughly document or record the reasons of each entry and store backup information along with a copy of the entry. So, simple journal entries also commonly used for minor transaction such as to record a purchase, a sale, or a refund. So, below is the example of simple journal entry. Second is a compound journal entry, means a combination of two or more debits and credits in a single accounting entry. So, it involves more than two accounts. So, you can in this entry you can combine the debits and credits under one entry. So, it means it is a journal entry with the following combination. So, isang debit at dalawa or mahigit pang credits or isang credit at dalawa or higit pang debts or dalawa or higit pang debits at credits. So, here's the example of compound journal entry.
So now, let's proceed to what is general journal. So based on the text here, general journal is the first place where data is recorded. And every page in the item features dividing columns for dates, serial numbers, as well as debit or credit records. So to simply define, a general journal refers to a book of original entries in which accountants and bookkeepers record raw business transactions. It is a document that records business transactions in sequential order. So when we say sequential order, meaning business transactions are recorded in consecutive or chronological order, which means in Tagalog, pagkakasunod-sunod. And in addition, some organizations keep specialized journals. And example of these are purchase journals. So purchase journals is a journal that record transactions that involve purchases purely. And that is the same with the sales journals in which it only records transactions that involves sales purely. So the purpose of specialized journals or special journals is that it only records specific types of transactions. So next is example of general journal. So the image here shows an example of a general journal document. So as you can see in the document, there are 5 columns, and the first column indicate the date, the second indicate the description, the third indicate the PR or stand for post reference, the fourth indicate the debit, and the fifth
indicate the credit. So in succeeding slides, we will discuss those parts of general journal. So the first part of the general journal is called date column. So date columns shows the date when the transaction took place. So in this part or column, this is where you are going to indicate and record the date of when you transact or perform the business transaction. So example of business transaction, let's say on July 6, the IT company bought or purchased computer equipment for cash worth 15,000 pesos. So since the transaction happened on July 6, therefore in the date column you will record July 6 since it was the exact date where the business transaction occurred. So the second part of the general journal is called particulars. So particulars shows the item of the accounts debited and credited as a result of a transactions analysis as well as a brief explanation of what the transactions about. So in this part, you are going to provide a brief explanation or a brief detail of what is the transactions about. So, for you to be able to fully understand this part, let's go back to the example of a business transaction that I provided earlier. So, let's read it again. So, on July 6, the IT company bought or purchased computer equipment for cash worth 15,000 pesos. So, since that is the given business transaction, so the first thing that you will do is to first analyze and identify that transaction that the IT company conducted. So, you have to consider what action or transaction did the IT company perform. So, based on the given example, the company or the IT company bought or purchased computer equipment. Therefore, the transaction was all about the purchase computer equipment. So, in the particular column, you will indicate and record computer equipment. So, next is number 3, which is called folio. So folio shows the number of an account in the ledger or a page of a ledger to which it transferred, and it is also called as a reference. So folio is commonly called as a post reference, short for PR. So this part or this column is used to indicate when entries have been posted to the ledger accounts. So, the folio or the post reference identify the specific location in the journal. So, this can be either the number of an account or account number or code number of an account or a page of a ledger. So next is number 4, which is debit columns. So debit columns, this is a money column showing the peso amount of the value received in transaction. So debits are the use of value for a transaction. So in accounting, this is used to express the increase of an asset or expense account or the decrease of liabilities and equity. So to deeply understand this part, for example, let's recap to the given business transaction that I provided. So let me read it again. So on July 6, the IT company bought or purchased computer equipment for cash 15,000 pesos. So since the IT company purchased computer equipment, the purchased product, which is the computer equipment, is now the asset or an assets of the company. And because of that, the company's assets are added. So, nganong nadungagan man ang company assets? Because they acquired or purchased computer equipment. And take note that when the company's assets, withdrawals, and expense are added, then we need to debit it. So, how are we going to debit it? So, first, let's know how much is the computer equipment. So, the computer equipment costs worth 15,000 pesos. So, therefore, in the debit column, you will record 15,000 pesos. So next is number 5, which is called credit column. So this is the last part of the general journal. So credit columns is the money column showing the amount of departed with a transaction. So credits are the source of value for a transaction. So it refers to the increase of liabilities or equity accounts or the decrease of an assets or expense account. So now again, let's relate this to the given example. So since the IT company paid for computer equipment in cash, and the cash is an asset, and this cash is or was derived from the company, because of that, the asset is subtracted. Why? Nga naman na subtract si asset? Because si money or si cash is an asset. And for IT company to be able to purchase or to acquire the computer equipment, they needed cash money to pay for it. So, nagkuha sila og cash from the company, nag-release sila og money. So, that is why the cash asset was subtracted or deducted. So, always remember that when the company's asset or the withdrawals and expenses are subtracted or deducted, we need to credit it. So, karon we need to identify how much money did the IT company derive or release. So, since ang palit nila kay computer equipment is cost 15,000 pesos, therefore, in the credit column, you will record 15,000 pesos as well. And take note that the amount of the debit or the debit column should always be equal to the amount of credit. So, dapat si debit o si credit is always equal. So, dapat parehas sila. So I hope you understand my explanation. So, let's move on to what is general ledger. So, A general ledger represents the record-keeping system for a company's financial data, with debit and credit accounts records validated by a trial balance. It provides a record of each financial transaction that takes place during the life of an operating company and holds account information that is needed to prepare the company's financial statements. So, the general ledger is also known or also referred to as nominal ledger. So, the main area of the general ledger is that this is where all of your accounting transactions are held. The ledger contains the records of all the payments, expenses, and assets of a company that take place over the lifetime of the business. So, what is the purpose of the general ledger? So, the main purpose of a general ledger, especially in accounting, is that is used to record all of a company's transactions. So, within a general ledger, transactional data is organized into assets, liabilities, revenues, expenses, and owner's capital. So next is the image here shows the example of general ledger. So if you will create a general ledger, so mauni siya ang dagway or ang format on how is general ledger is done. So the next slide is the parts of general ledger, and that will be discussed by the next reporter.
Parts of general ledger.
There are four parts of general ledger, which are date columns, particulars, folio, and money column. So, in date columns, show the date of the transaction that occurred as a recorded in the journal. So, dinhi sa date column, diri na to makita kung kanusa nahimo ang transaksyon. So, sa iyang exact date kung kanusa siya nahitabo. Then, in particulars, show a brief but a concise explanation of a transaction as shown in the journal, and it is sometimes called as explanation. So, in a particulars, ito ay maikling paliwanag o summarizing ng naganap na transaksyon. So, ito ay kadalasan na tinatawag na pagpapaliwanag. In short, particulars is a short discussion of a transaction. In folio, shows the page number of a journal where entires are taken from. So, dinhi sa folio, dinhi nato makita ang mga page number. So, in folio, there are two types of folio. The journal folio and a ledger folio. So, dinhi sa journal folio, it is a term used in ledger as a part of a ledger statement, and it shows us a column of both the debit and the credit side. On the other hand, ledger folio is a term which is used in a journal as it's part of the journal statement, which is shown as a column in the journal statement. So in a money column, the debit money column shows the amount that are transferred from a debit money column of a journal, while the credit money column shows the amount that are transferred from the credit money column of the journal. So in a money column, there have two classification, which are the debit money columns and the credit money columns. A debit money columns refers to a money going out to the account, while opposite is a credit money, which means money coming in. So ang kining debit money columns, bali mao ni siya ang mga kwarta. In example ani is a businessman. So ang debit money nimo ani kay ang imong puhunan. Puhunan nimo nga kwarta. Then ang kining credit money mao ni siya ang imong mga expenses, bali mo ni imong mga gipamalit. Debit and credit balance. In debit balance, a debit balance is an account balance where there is a positive balance in the left side of the account. Accounts that are normally have a debit balance include assets, expenses, and losses. Example of these accounts are the cash account, receivable, prepaid, safe of assets account. So ang kining debit balance is kuan siya. Example ani is if naa kay paliton nga butang, then mas dako ang imong gibayad kaysa sa iyahang total cost. So naa jud kanay kambyo or sukli. So mao na siya ang debit balance. Ang kambyo sa kwarta nga nakuhaan sa credit. Then in credit balance, a credit balance is the ending total in account, which implies either a positive or negative amount depending on the situation. So mo ni siya ganina ang credit balance. Ang credit balance is total na imong expenses. For example gihapon ani kay kanang mopalit ka og lollipop nga tag piso, candy nga tag piso, ug makaon nga tag piso. So ang total ana is 3 pesos. So mo na siya ang credit balance. So imong credit balance is 3 pesos. Then ang imong kwarta is 5. So naa kay kambyo ana 2. Ang kanang 2 mo na siya ang imong debit balance. So naa ni siya yung reminder, if both totals of debit and credit sides are equal, the account said to be in balance or account close. So normal ra man jud nang ingana, balik og 5 ang imong kwarta, then ang imong palitonon is balik 5 ra pod. So equal ra na siya. So wala kay debit balance. So mo na siya ang ginakuan na closed account. Next is the T account. A T account is an informal term for a set of financial records that use double entry bookkeeping. So mo ni siya ang kuan T account. A T account rule, the debit and credit rule. So naa gyud sa always sa left side ang debit. Then ang iyang credit is nasa right side. The term describe the appearance of the bookkeeping entries. First, a letter T is drawn on the page. Mo na siya ang example ni is naandray sa kilid kaning T niya nga baglis. So the title of the account is the entire just above the top horizontal. So mo ni siya ang iyang title, the debit credit rule. While underneath debits are listed in the left and the credits are recorded on the right, separate by the vertical line on the letter. So ang mo ni siya ang letter T ang nag-separate sa debit and credit. So the T accounts are fundamental, useful, specular, and helpful. A T account is a visual representation of an account to think through the journal entries for recording transaction. So naay ko anang kuan T account in 4 simple steps. First step is debits on the left, credits on the right. Second step is a T account is like a balance sheet. Third steps is describe first which type of account when which specific account. Fourth is calculate ending balance per account. The chart of accounts. Chart of accounts is a list of accounts titles that are prepared for hand to guide the bookkeeper and accountant of what specific titles are used in describing the exchanging values of transaction. The chart of accounts titles that are arranged in this order: assets, liabilities, capital, income, and expenses. Chart of accounts is a list of all accounts that are business can allocate data to. So, a chart of account is account just like a table of contents so that you can quickly see what accounts and to put data. So, ang kining chart of accounts is mura ra daw ni siya og table of contents. Diba sa isa ka libro, daghan man kay na siyang mga topics. So mo na siya na ay kuan table of contents, mao ra na siya sa chart of account. Ang table of contents para dali ra nimo makit-an ang specific topic or specific account na imong gipangita nga imong butangan og data or imong kuhaan og data. So mo na siya ang charts of account. So natay example sa charts of account, mo ni siya ang iyahang example. So mo ni yang example. Naa siya number column, naa siya description column, account type og financial statement. Aron dali ra nimo siya matrace if ever cash, account receivable, prepaid expenses, inventory, fixed assets. Bali pasulod na siya antod sa tumoy, bali in order. Mo ni siya ug ang iyang description.
So the last part here is the trial balance. So what is trial balance? A trial balance is a report that lists the balances of all general ledger accounts of a company at a certain point in time. The accounts reflected on a trial balance are related to all major accounting items, including assets, liabilities, equity, revenues, expenses, gains, and losses. It is primarily used to identify the balance of debits and credits entries from the transactions recorded in the general ledger at a certain point in time. Or trial balance, we can conclude that it is a report run at the end of an accounting period. It lists the ending balance in general ledger account. It reports primarily used to ensure that the total of all debits equals the total of all credits, which means there are no unbalanced journal entries in the accounting system that would make it impossible to generate accurate financial statements. The year-end trial balance is typically asked for auditors when they begin an audit so that they can transfer the account balances on the report into their auditing software. They may ask for an electronic version which they can more easily copy into their software. Even when debit and credit totals stated on the trial balance equal each other, it doesn't mean that there are no errors in the accounts listed on the trial balance. For example, a debit could have been entered in the wrong account, which means that the debit total is correct, the one underlying account balance too low and other balance too high. For example, accounts payable clerk records a $100 supplier invoice with a debit supplies expense and a 100 credit to the accounts payable liability account. So the debit should have been to the utilities expense account, but the trial balance will still show that the total amount of debits equals to the total number of credits. Errors in trial balance. We could switch debits and credits in a journal and get them wrong the way around. Or we could just posting the same journal twice or not posting it all. We could just post our journal to wrong accounts of tally. Or we could post the bounce journal to the correct account. But the numbers are wrong because it messed up workings. So by no means, bounce trial balance means correct and certainly a good start. The trial balance can also be used to manually compile financial statements, though with a predominant use of computerized accounting systems that create the statements automatically. The report is rarely used for this purpose. In effect, there is no longer a need to use the trial balance report in accounting operations. It is strictly a report that is compiled from the accounting records. However, since adjusting entries may be made as a result of reviewing the report, it could be said that trial balance accounting encompasses adjustments process that converts an unadjusted trial balance into an adjusted balance trial. So the types of trial balances. When trial balance is first printed, it is called unadjusted trial balance. If kuan siya kanang printed siya, if the balance is first printed, tinatawag nato siya nga unadjusted trial balance. And also when the accounting team corrects any errors found and makes adjustments to bring financial statement to the compliance with an accounting framework, such as GAAP or IFRS. Or this report is called the adjusted trial balance. Adjusted trial balance is typically printed and stored in the year-end book, which is then archive has been closed. The report is called the post-closing trial balance. Take note, it is called if it's finally the period is been closed, it is called post-closing trial balance. It means all balance contains the beginning balances for next year accounting. How the trial balance is used in consolidation. So what is consolidation means? Is to combine assets, liabilities, and other financial items of two or more entities into one. Consolidation also refers to the union of smaller companies into larger companies through mergers and acquisitions. That's what consolidation means. Ano dito malibog. If there are subsidiaries in an organization that report their result to a parent company, the parent company requests an ending trial balance from each subsidiary means. Parent company means a single company that has controlling interest in another company or companies. Bali, ang parent company, they have the control of interest sa certain company or many other company. Ana mo na siya ang parent company means. So which it uses to prepare consolidated result for the entire company. Alternatively, the parent company may require all of its subsidiaries to use the same accounting system, so that all subsidiary results can be automatically rolled up into consolidated financial statements. So next is what is the difference between a trial balance and a general ledger? A trial balance only shows the ending balance in each account, while a general ledger also shows the detailed transactions that comprise the ending balance, or at least points toward the relevant subledger that contains this information. This additional level of detail reveals the activity in an account during an accounting period, which makes it easier to product research and spot possible errors. When making trial balance format, the initial balance contains the following columns. Medyo blurred itong kuan. Example, mag-provide lang kog video niya sa akong paghimo sa trial balance. So, balik ta sa trial balance. To recap, sa itong na what we learned about trial balance is, trial balance kay it is an accounting report showing the closing balances of all general ledger accounts at a point in time. Also, it is an internet report used by accountants to check for errors and produce financial statements. And last kay, the totals of debit and credit columns must match each other. So that's all for my report. Thank you.
First, the business owner invests $100 and in return, the business issues $100 in stock. We are going to debit cash by $100 and credit owner's equity by $100. Then, the business takes out a further $200 loan to fund its activities. We need to debit cash again by $200 and credit loans payable by $200 as well. Third, the business spends $30 in cash on window cleaning equipment. We credit cash by $30 and we debit equipment by $30. Next, it spends a further $50 on cleaning supplies. The payment is made on account. So we debit supplies by $50 and credit accounts payable by $50. After that, the business makes $150 cleaning windows, using half of its supplies in the process. We debit cash by $150 and credit revenue by $150 to recognize the revenue. We also credit supplies by $25 and debit cost of sales by $25 as well to account for half of the supplies being used up. Finally, in the journal entries video, we spent $20 at the laundry to clean our equipment, so we debit laundry costs by $20 and we credit cash by $20. Now that we have all of our September journals written out, we can take the totals for each account. You'll notice that the sum of these totals is 0. That's a good sign, because it shows that our trial balance is balanced. Now, one last thing to finish this off. Let's reformat our working trial balance to show our debits and credits in separate columns, and let's rename this to trial balance for the period ended 30th of September. The total of our accounts with a debit balance is $500, and the total of our accounts with a credit balance is also $500. So here we have our final trial balance for the September accounting